Hey everybody, and welcome to the Prosperity Trading System. This is a system designed to help you walk through the process of learning how to trade from start to finish. Before we get started, the first thing that everyone should understand is the basic language of the stock market or trading and investing. In order to be on the same page when you're talking to other investors or other traders, it is imperative that we all know and speak the same language. The purpose of this course is to let you know the basic terminology that's used moving forward when it comes to the stock market language and understanding basic terms when it comes to the fundamentals of understanding trading and market analysis. So first, let's talk about what tradable market terms are. So there are several tradable markets. This includes the stock market, the Forex market, the crypto market, the commodities market, the indices market, the bond market, the ETF market, the derivatives market. So let's go through these a little bit. So the stock market. The stock market is a place where traders come to publicly buy companies, and they can buy this in the form of a share. When you purchase a share of a company, you are entitled to the ownership of that company. If the company is one that offers dividends, you are entitled to be compensated for holding that share through dividends. Think about companies such as Microsoft, Apple. These are companies that are traded on the stock market, and they give you the opportunity to be either a long-term investor or someone who's interested in trading in order to make money off their movements. The Forex market. The Forex market, also known as the foreign exchange market, is one of the largest markets in the world and is the most liquid market in the world. Traders come here in order to sell and buy fluctuations in exchange rates of different currencies that are usually traded in pairs, such as the euro versus the US dollar or the US dollar versus the Japanese yen. This market operates 24 hours a day, 5 days a week, and has the highest liquidity in the world, which makes it extremely popular and very opportunistic for beginners. Crypto market. The crypto market is a rapidly growing market. It began as crypto such as Bitcoin, Ethereum, and Ripple have started to expand. And now that these markets have been included in some of the derivative markets as well, this is only rising in popularity. Now, these markets are highly volatile and do have the potential to have amazing risk and reward offered in terms of trading. They do work in futuristic terms in terms of digital financial information that is traded on a blockchain technology. So traders have the ability to use short-term fluctuations within the blockchain in order to gain either favorable odds when you're entering trading on a short-term basis or entering as an investor. The commodities market. The commodities market is for selling physical goods, things such as gold, silver, crude oil, platinum, or agriculture. The top 4 strategies that are used and the markets that are used for commodities include precious metals, energy, livestock and meats, and agriculture. The indices market. The indices market involves speculation in terms of growth of stocks representing segments of the market or segments of the economy. For example, you can have the 100 top companies in the world on the stock exchange market. You can invest in broader markets if you're interested. Indices markets tend to be the most liquid in terms of stocks. They have effective and predictable price action, and they provide to be extremely diverse in terms for traders to use them. The bond market, also known as the debt market, involves trading government and corporate bonds. Bonds are generally considered less risky and less volatile than the actual regular stocks, and they prove to have more stable based income since they are government backed. This is usually ideal for people who are well capitalized and who are interested in conserving their wealth, however, still looking for steady returns in a low risk environment. The ETF markets. ETF markets are also known as exchange markets. These are typically markets that track major indexes and major sectors or major commodities in a one pooled application or location. These are extremely popular because they are way more flexible, easier to trade, have a lot lower cost, and are extremely beginner friendly. Derivative markets. Derivative markets involve trading financial contracts and underlying derivatives such as stocks, currencies, or commodities. Derivative market is broken up into contracts for differences, the futures market, and also options market. Now, some terms that you need to know in terms of how to approach the market, you're going to have to understand what a chart is, what time frames can be used on charts, what are candlesticks, what is market timing, how do institutions use this information to trade, and how novices and other retail information is used in order to trade. And these are all things that we will cover over the course of this information and different courses as we move along. Now, it is important to decide how you want to analyze the markets. There are different approaches to understanding how the market will move and how you plan on trading the markets. There's fundamental trading. Fundamental trading is a strategy that is used by traders or investors to focus on key events that are occurring within a company itself. So if you're interested in a company for a long-term basis, this uses the technique of understanding the company from a long-term perspective, such as quantitative data, the metrics of the company, the cash flow statements of the company, their balance sheets, the return on the equity that they use, the price of their earnings, also known as a PE ratio, or the price to book ratio. This is how you can understand the price of a given stock and whether or not that stock is at a fair value, a good discounted value, or an overpriced value. Technical trading or technical analysis trading is a technique where traders use price markets on stocks and use stock charts in order to use indicators such as volume, trend analysis, historical data, and statistical analysis, which all show up in the form of looking at things on a chart, which gives us behavioral and economical reading patterns based on what can be seen in candlestick charts. There's two typical approaches, which is a bottom-up approach or a top-down approach. In the bottom-up approach, traders usually focus on individual stocks and securities, and on a top-down approach, traders will focus on the overall economy, the global economic investment economy, and as well as understanding which industry to invest in using a top-down analysis. Now, decide how to approach the market. You're going to need to understand what works best for you. Are you interested in the market as a trader? Trading generally means that you are purchasing, selling, or buying or exchanging at wholesale or retail prices in order to make a profit. Now, there are different approaches to doing this because you can also be an investor. An investor is someone who's looking to have profit and build wealth over time, which means that for the most part, this can be an investment portfolio or strategy placed together with a retirement account, such as a 401k, a SEP IRA, or anything of that nature, plus the assets that you're holding or purchasing for long term, such as physically buying gold or investing in businesses or even being an angel investor. There are also other approaches. You can be what's called a day trader, which is someone who purchases and sells different types of markets in an intraday portion of time in order to make profit on a daily basis. This is also broken down into scalpers or high frequency traders, which are people who are interested in trading, and the time frame here can be from minutes to seconds in order to enter and exit a position for profit or for a loss. Swing trading, on the contrary to day trading, is when traders enter a position with the process of holding this position overnight or a longer time frame than a scalper would. This can be for hours, days, months, or even weeks. Now, some terms to understand in terms of the stock market itself is there are equities or indexes and major indexes, which most people use in order to get a pulse or how the market is moving. This includes the Dow Jones, the NASDAQ, and the SP 500. The Dow Jones Industrial Average is weighted with 30 of the largest companies in the US stocks. Similar to that, the NASDAQ is weighted with over 100 stocks that are based on the US, and the SP 500 is average weighted over 500 stocks. Now, the markets can move in a bullish pattern, which means the markets are moving up, or they can move in a bearish pattern where the markets are moving down. Now, there's also companies that are new to the markets. This is known as an initial public offering, which a company becomes available to the public for the first time. There's also different ways to approach stocks. There are what's called dividend stocks, which are stocks that share in the profits with their shareholders. Those are known as also blue chip stocks. There's other things to know about as well in terms of where levels of price are respected. These can be known as support levels or resistance levels. There's something called short selling or a short position, which is when you want the stock to fall. And there's something called a long position, which is when you want the stock to rise. Now, some terms that you should know as an investor. An investor typically has a portfolio, and this portfolio can be broken down into many different categories, including having things such as bonds in one portion, sitting in cash, having a management portfolio, and managing interest rates and capital gains. Some of it can be within the stock, some of it can be within business, some of it can be within crypto, and others can sit in cash or real estate. So these are just some things to understand as you're introduced into the stock market. Now, the best way to get started is to quit talking and to begin doing. This is a quote from Walt Disney. I like to end my stories with quotes so that everyone understands that the next step is to move forward. Wishing you all the best of luck. Have a great day. See you in the next class.